Welcome to the Insights brought to you by Financial Education and Wellbeing Research Centre, FEWRC, AKPK. I'm your host, Naila Huda, and today we are diving into one of the fastest growing financial trends in Malaysia, Buy Now Pay Later, or BNPL. It is quick, it is easy, and for millions of shoppers, it feels like the smarter way to pay. From sneakers to smartphones to your weekly groceries. Just a few clicks, split the cost, and often no interest. Sounds perfect, right? But here's the catch. Is BNPL helping Malaysians to manage money more flexibly, or is it quietly leading us into cycles of debt? In this episode, we will explore the BNPL boom, its benefits, its risks, and what the future holds for consumer protection in this space. But before we hear from our special guest, let's head over to our colleague Fauzi for some key facts on BNPL in Malaysia.
Thank you, Naila. Here is what the numbers reveal about BNPL in Malaysia. A striking 73% of BNPL users come from B40 income group, earning below 5,000 ringgit a month. Another 21% are from the M40 bracket with monthly incomes of 5,000 ringgit to 10,000 ringgit. According to a survey by Consumer Credit Oversight Board Task Force, CCOBTF, 69% of users rely entirely on BNPL as their only source of financing. More than half of them, 56%, use BNPL for daily essentials, while only 12% use it on non-essential items. This is worrying. When credit is used to cover necessities, it can form a borrowing habit that's hard to break, and this issue is compounded by spending behavior. A study by AKPK found that 3 out of 10 survey respondents were compulsive online spenders, and 38% admitted falling into debt from buying things they did not really need, with nearly 1/3 admitting those purchases were impulsive. This pattern highlights how BNPL, while convenient, can feed into compulsive online spending. As of the first quarter of 2025, Malaysia has 6.5 million active BNPL accounts. Interestingly, users are confident. 79% rate their financial awareness to be satisfactory or good, and many believe BNPL is simple to manage. The appeal is clear. It's user-friendly, offers rewards and discounts, supports personal financial management, and creates a sense of affordability. Additionally, 88% of users pay on time, with fewer than 0.5% missing payments completely. Around 12% paid late but eventually catch up, most often because of unstable income, competing financial priorities, or lack of funds. Still, experts warn that BNPL can quickly turn into a debt trap, especially for lower income groups and young people. Which brings us back to our big question: is BNPL an empowering tool, or is it quietly fostering overdependence on credit? This is something that we have to ponder upon. That's all from me. Back to you, Naila.
All right, thank you, Fauzi, for this snapshot. Now, to help us unpack this further, I'd like to welcome our special guest for today. He was the former Secretary to the Board of Directors of Bank Negara Malaysia, BNM, and former Director of Strategic Communications Department. Currently, he heads the Consumer Credit Oversight Board Task Force and is the Assistant Governor of Bank Negara Malaysia. Let's welcome Tuan Abu Hassan Al-Shari Yahya. Assalamualaikum. Encik Abu, how are you?
Warahmatullahi wabarakatuh. Thank you very much. I'm fine. I'm good. Thank you.
Thank you so much for joining us on the Insights. Now, we want to take a look at some of the numbers that Fauzi shared with us earlier. With Buy Now Pay Later, or BNPL as it's more commonly known, it's clearly becoming a very popular, perhaps one of the most popular ways for Malaysians to shop. But do you see this sort of convenience, this tool, perhaps leading people to take on more debt beyond their capacity without even realizing? And what do you think are some of the measures that are put in place to monitor, to oversee some of this BNPL trend? We just want to see the issue in general and try to frame what's actually happening right now.
Yeah, thank you for that question. So, how do we see the development of buy now pay later in Malaysia? Is that actually it's growing very, very fast. So we saw that, as what's shown in the statistic just now, that it has actually, in terms of the volume of transactions for buy now pay later, for the 6 months this year until end of June 2025, we saw the volume of transactions actually increased tremendously. It has gone up to 102 million transactions for that 6 months alone.
Just 6 months.
And then when we talk about the amount, it actually has gone up to 9.3 billion ringgit. This actually compared to 7.1 billion that was actually what we saw in the second half of 2024 last year. So what it means is that it has actually risen 31% during that period. So what actually that gave rise to the concern is that because majority of those who are actually using buy now pay later, actually these are what we see as potentially vulnerable consumers. And for those amount, 40% are actually being used by the youth. What we define by youth are those that 30 years old and below. And importantly also, we saw that based on our survey, actually 70% of those users are those with income of 5,000 ringgit and below. So I think the problem statement or the concern here is that buy now pay later are actually being used by low income people as well as also the younger generation. But this is something that kind of development that actually not unique in Malaysia, but actually it's a development that happens globally as well. So the point is that it has actually become something given the trend of a very fast growth. Then the concern is that whether our consumers, financial consumers, are actually managing the use of buy now pay later wisely. And buy now pay later is something that derived from the innovation and also the seamlessness of the transaction, given the e-commerce platform that actually becoming pervasive, and people are very comfortable actually shopping or purchasing online. Then there will be the opportunity for buy now pay later industry actually for them to offer buy now pay later products, and it becomes so easy and seamless. So as a result, while it actually is very convenient, but it does actually can also pose risks. So those who are actually not able to manage their financials wisely. So the point is that currently the buy now pay later in Malaysia are not regulated. So this is where the point, the fact that we need to look at how best to actually have a policy that we can actually monitor. At the same time, also avoid the unintended consequences of people who are actually using buy now pay later. While it can actually be useful for some, but it's also something that has to be done in a very responsible manner. So there lies the need to actually regulate the buy now pay later companies. But when we are talking about the kind of law that we're going to put in place, this is going to be what we call Consumer Credit Act. So currently it is being discussed in the Parliament, being debated, and it has actually passed the Dewan Rakyat. There's something that is going to go to the Dewan Negara soon, and we hope actually the law can be passed this year, and we wish to actually make this law effective early next year. So the idea is that with the Consumer Credit Act, we are going to be able to regulate those credit providers and also some credit providers that currently are actually not regulated. So buy now pay later is actually one of those that currently not regulated.
Yeah.
That would be regulated by Consumer Credit Commission later once it's being set up.
Yeah, you mentioned a lot of really key points there, but I think one saying that comes to mind is with greater power comes greater responsibility, right? It's, I think, Spider-Man, if I'm not wrong. And I think it's a topic that's very close to heart. It's a very appealing option for a lot of young people like myself, right? The philosophy of do now, think of the consequences later, right? But it's something that we can't afford. We have to think of the consequences now. But building on that, you mentioned about the Consumer Credit Act, of course, the CCA. Could you tell us a little bit more in detail about what this CCA seeks out to do and how actually it strengthens consumer protection by regulating, as you said, a broader range of credit providers and these credit service providers that are not actually regulated right now. So how does that actually work?
Yeah, so the main objective of this Consumer Credit Act actually to enhance the protection to the credit consumers. How is it going to do that? Firstly, it's going to regulate the credit industry and credit service industry, particularly those that currently not regulated. Secondly, to ensure proper conduct as well as responsible lending practices by the credit provider. And thirdly, to actually promote an orderly as well as fair and efficient credit industry.
Yeah.
So by doing these three things, we actually going to strengthen the level of credit consumer protection in the country. So under this law, there would be actually a new commission that is going to be set up, the Consumer Credit Commission. And then the Consumer Credit Commission actually would be regulating the buy now pay later, will be regulating the factoring companies, the leasing companies, and importantly also not just the credit provider, but what we term as credit service provider.
Okay.
Who are they? Credit service provider, they don't actually provide credit, but they are in the overall credit ecosystem. An example would be like the debt collection agency. So they don't give debt, but they are involved in collecting debts on behalf of
Just
the credit provider as a service. So sometimes they could actually pose harm to the credit consumer. The way that they actually carry out the debt collection can be rather harsh and can be rather dangerous at
this
times.
will be regulated.
So this also will be regulated. So, so some of these, not just the debt collection agency, but there are others like the impact loan buyer. They actually bought the non-performing loans from the banks, for example, and they actually take over the loans, and after that they do the recovery.
Yeah.
And there are others that the debt counseling and management agency. Of course, the one that we very familiar actually is the AKPK, but there are others actually who position themselves as if they are providing advisory or they are helping to actually manage debt by trying to do some kind of negotiation with the financial institution on behalf of the credit consumer, and they try to see how best to come up with the arrangement for repayment. So sometimes some of these, because they are not regulated, they may be actually be doing certain practices that can be harmful to the credit consumers. They may be even be charging fee for that, and it can be rather exorbitant. So because they are not currently regulated, so there are these risks that it could actually pose harm to the credit consumers. So the idea is that when we have this law, we are going to be able to regulate all these credit providers and also the credit service provider. And under the law, we are going to have a proper way to actually monitor how this actually entities, credit provider or credit service provider, is going to undertake their operations.
Okay.
And what's important here is that there will be a proper due diligence for this entity to actually carry out these businesses. And importantly also, under the law, there will be actually principles of area that what kind of proper conducts that have to be undertaken by the credit providers and also the credit service provider. Example would be how they carry out their promotion, how they are ensuring that there are fair terms and conditions of agreement, how to make sure that they also carry out what we term as affordability assessment. This is one actually a very important part of the requirement under the law, that the credit providers need to undertake affordability assessment before they actually lend to the potential borrowers. Why we are actually instituting this requirement? Because we want to make sure that for those people, they may want to actually borrow, but if they are in no position to be able to repay, by right they should not be given the credit, because giving credit to them actually will be harmful to them, because at the end of the day, if they cannot pay, then it's going to be to their detriment later on when people are start to seek for repayment and even take legal action against them. Then they will be into difficulty. So the idea is that as a responsible lender, they must be able to undertake some kind of affordability assessment, so that only those people who are in the position to pay that for the entire tenure of the loan actually can be given a credit line, including buy now pay later. So there are other things in terms of the area of conduct that we expect the credit providers to do. For example, if they're going to collect debts, they must do that professionally, fairly. They cannot do it in such a way that it's going to be very harsh and also rather intimidating and things like that. And there are others, like in terms of protection, in terms of customer information, information security, in terms of to make sure that when they are also be able to provide the kind of facilitation when there are complaints, in terms of complaints management system. So these are the things that we do expect the credit providers to have in place before they actually carry out their operations.
So you describe various aspects of regulation, right? It's right now it looks quite comprehensive, quite overarching, but of course change, we can't expect that to happen overnight. Rome wasn't built in a day. So having described all these different aspects, these different phases, right? We also, I think, understand that this act will be rolled out in phases, not entirely lump sum or at once. So could you walk us through what each phase actually involves, some of the goals and the scope of regulation, and why there is this such phased approach rather than just rolling everything out, implementing everything at once?
So this a little bit of this complication. Why are we not doing it in the big bang? Why not just do it in one shot? So the reason why it's being done in the phased approach, because we want to do it in the measured and also in an orderly manner. So if I can explain a bit more, so the first phase is where we are going to have the Consumer Credit Commission that is going to regulate those entities that who are providing credits currently not regulated or supervised by any authority. So that would be the first phase. So I did mention earlier some of those categories of those currently not regulated. And the second phase, what we're going to do is that there are already to some extent been regulation on, for example, like on the money lenders. For example, like we have the Money Lenders Act 1951. We also have the Hire Purchase Act 1967, and we also have, for example, the Pawnbrokers Act. These are doing the pawnbroking, or for the Sharia compliance, we call it Arano. It's actually a 1972 act. It actually is quite an old act, but what it means is that they are already actually being regulated to some extent by several ministries. For example, like KPKT, regulating the money lenders and pawnbrokers, and also like KPDN, administering the Hire Purchase Act, for example. So under phase one, these entities would still be regulating the money lenders, pawnbrokers, and even administering the Hire Purchase Act, which is already under them now. The only thing is that when we have this Consumer Credit Act, actually it's an umbrella act, it's an overarching act. What it does is that it actually provides the kind of protection which are actually more comprehensive. it also enables the existing regulator like KPKT and KPDN, even Bank Negara and Securities Commission, to actually use the Consumer Credit Act to actually strengthen whatever protection that they feel appropriate for their own regulators.
Yeah, so it streamlines.
So it's streamlining. So while the Consumer Credit Commission would actually regulate the unregulated ones, the existing regulatory and supervisory agency are actually empowered under the Consumer Credit Act to also do things that can improve the way that they could actually strengthen the protection to the under them. It does not diminish.
Yeah.
So meaning that it coexists. So the Money Lenders Act, Pawnbrokers Act coexists with the Consumer Credit Act. But in phase 2, the idea is that we want to centralize it better.
Okay.
So that's where those money lenders, pawnbrokers, even those non-bank that doing hire purchase would actually be brought over into the Consumer Credit Commission under the phase 2. So that's where we are moving, hopefully by 2028, that is the plan.
So then who will be enforcing?
Will be under the Consumer Credit Commission.
Solely?
Yeah.
Okay.
So I think the idea is that we will be able to bring in all those non-bank credit provider actually into under one roof, which is under the Consumer Credit Commission. So what it does actually to reduce the fragmentation of how we are regulating credit providers and also even credit service provider in the country. So what we are going to actually be able to achieve is that with regard to the non-bank credit providers and credit service provider, it will be already under one regulator in phase 2.
Okay.
Yeah. So, but of course, for those banks that are under Central Bank, Bank Negara Malaysia, and under SC, would remain with them even under phase 2.
Yeah. Well,
but
we'll take a closer look at that. We will take a short break. Thank you so much for this sort of general, the bigger picture view of the Consumer Credit Act. We will be probing even more, getting even more details on what this actually entails. We'll be taking a short break. Don't go anywhere. There's still plenty to unpack with our special guest. We'll see you in a bit.
Let's go. Let's go.
Welcome back to The Insights with AKPK FEWRC, and on today's episode we're still talking about a Buy Now Pay Later or BNPL, and still with us our very special guest, Assistant Governor Tuan Abu Hassan of Bank Negara Malaysia. Thank you so much for everything that you've explained about the Act that we covered quite extensively before this, but we do want to take a look at the purpose of the Consumer Credit Act, the goals and the reasoning behind it. And I guess looking ahead beyond the phases that you've taken us through, could you perhaps explain some of the supervisory approach behind this Consumer Credit Commission or the CCC? Because as you mentioned, it kind of shifts from the various regulating bodies to now being one single umbrella, one centralized approach. So how would that actually work?
Okay, so as a regulator, what this in terminology that we use is a conduct regulator. So we look at in terms of the behavior, in terms of the conduct being carried out by the credit provider and also the credit service provider.
Yeah.
And we want to make sure that they are going to do things in a good way, and also they must be a responsible lender. So for this, the approach of supervision actually is very much risk-based.
Okay.
Meaning that we are looking at in terms of how we supervise, what would be the concern in terms of the risk of harm to the credit consumers. So meaning that when we look at the type of products or even the operations of the credit provider, we want to see in terms of what they do can actually pose harm to the credit consumers. Harm can be in the form of how they actually do their promotion, how they are actually selling the products, what kind of charges, whether they are excessive, and also whether their terms and conditions are clear. Sometimes there are many hidden clauses that make people just sign up, but after that they saw that there are so many things that become a liability to them, and there are many other areas of protection that we have put in the law. So when we supervise, particularly under phase 1, when we look at those not regulated, then there will be actually a requirement for them to be licensed or for them to actually be registered. So we are going to license those credit providers that are not regulated yet, and we are going to also register those credit service providers that has not been regulated yet as well. So by doing that, we would undertake what we term as fit and proper assessment to make sure that those who are going to carry out these activities are actually having certain minimum requirements, that they are in place for them to be able to conduct their operations in a responsible manner. So there will be some kind of financial requirements, and there will be also reporting requirements by them on a periodic basis. So as a regulator, there will be the ability to obtain data, and there will be ability to look at how they carry out the operations, and we can actually undertake proactive surveillance. And there will also be things that we are also providing avenue for complaints. So if people are not happy, they can complain directly to the provider, or they can even complain directly to the Consumer Credit Commission. So based on all this, it becomes a data point and also the information and a tool for the regulator to be able to monitor and supervise. And the approach actually, as I mentioned earlier, is that it's a risk-based. We are going to put a lot more intensity in terms how we're going to monitor, depending on what area and also depending on what kind of products that can actually pose harm to the credit consumer. So meaning that we are not going to do a standardized approach for everything, but we are going to look at what type of operations, what kind of products, and what institution that are actually carrying out, whether they are actually doing things in the more harmful manner to the credit consumer. So that would be kind of a very dynamic approach. How a regulator actually going to undertake a supervision. So when we supervise, we actually can take an immediate corrective action. Meaning that we can take administrative action, we can actually advise the credit provider, we can even revoke the license if we want to, if we see that what they are doing is very harmful to the credit consumer. So these tools and capability are actually embedded in the law, where actually it empowers the Consumer Credit Commission and even the other regulatory and supervisory agency using the Consumer Credit Act to be able to protect the credit consumer. So it is something that can be done in a very preemptive manner. We do not wait until a problem become bigger before we can take action. Naila, as an example, even when we start to look at the buy now pay later, we discussed about that earlier. Even now, they have not been officially regulated and supervised, of course we have been having engagement with them already. And we have been able to actually get data in terms of the amount of transaction, the volume, as we discussed earlier. Those are actually given to us voluntarily by the credit provider. But once they are being regulated, we actually can have more data point. We can actually even go and do inspection and examination on them, not just asking for information alone. So this actually would give the ability for the regulator to really understand the business, to be able to monitor and do surveillance and be able to take corrective actions even much earlier. Although there are powers to even take criminal action, but we want to do actually a lot more proactive actions in terms of supervision to actually reduce harm to the credit consumer and mitigate the issue before it becomes more problematic.
You've described various regulatory tools at the expense of the Commission. This term you describe as proactive surveillance, being more proactive, not just necessarily waiting until something becomes a big issue that becomes viral, right? But being more proactive in that sense, being able to revoke licenses. So there's various regulatory tools here. So what are the kind of direct actions, the enforcement powers will the Commission actually have to regulate credit providers and services, and how does that translate into the more tangible benefits that users can see and can expect in terms of safety? Because you mentioned there's a lot of emphasis on harm and protecting consumers from harm. So how soon and how tangible will these benefits be?
So I think the law, make it very clear that what kind of conduct, proper conduct that has to be actually practiced by the credit provider. So in the same vein, from the credit consumer perspective, you'll be more aware actually what areas that you are actually protected with. Meaning that the credit consumer would know that, if is that how the credit provider should do the marketing. They have to be more transparent, and I have my right to know, in a very clear manner what actually this product is all about. So similarly, while we are putting the requirements on the the regulatee, consumers also will be able to see, these are actually a long list of things I'm being protected with. So with actually awareness and education, then credit consumers can actually be more active about how they should be able to question if there are providers that are doing certain things which they feel that is not right. So I think that's one benefit to the credit consumer, because there is clarity in terms of areas that they are protected with. And there are other things that we actually institute or require for the credit providers to do, meaning that they must have a proper complaints management system. And we expect them to be able to be transparent to the credit consumer. If you come and complain, you expect an answer, you are going to get an answer. If you're not happy with that, either you can appeal or you can even come to Consumer Credit Commission. If they think that the credit provider are not doing enough, it's not fair to them. So all this avenue actually will be made available to the credit consumers because of the enforcement and also the implementation of the act. So in terms of action, there are repertoire of things that can be done in terms of enforcement. It can be advisory. Because we feel that it can be corrected easily, then we are just going to remind or advise the credit provider just to correct the wrong things that they are doing. If we feel that it's severe, we can even penalize them and take certain other administrative action. There are actually monetary penalty that we can impose on the provider. If we think they are more severe than that, we can even take enforcement action like even on the criminal offences. And there are provisions in the law, for example, if they are undertaking unlicensed business, which is very, very, to me, is a very serious. Then the point is that they can even be jailed 5 years, or even being penalized and penalty of 5 million, or even both. So there is actually various areas of protection in the act. There are actually penalty and consequences if they actually fail to actually adhere to. So these are actually things that make available to the regulator what we can do for us to be able to enforce the law.
Now, if it's okay, I want to quickly look at what you mentioned earlier about having more access to the sort of information that providers are willingly sharing right now, but perhaps with the Act, the Commission will be able to sort of have access to even more information. But how would you say then the kind of access that you have, how much of it will be into the sort of data that they have as providers, but also consumer data? Will that be protected? Is that being taken into account as well?
Yeah, so practically, now with the technology and everything, data actually is very key. For any regulator, the ability to get data and the ability to use data for the purpose of provision actually is very vital. So there are actually many ways. Of course, there will be periodic data submission in terms of the activity of the credit provider. That's how we got to know the volume, the trend, and everything. On top of that, we can actually look at the terms and conditions of the agreement. We can actually, even with the current technology, use natural language program to be able to scan through all the terms and conditions that were issued by the credit provider and see whether there are areas in the terms and conditions that could be actually potentially not fair. to the credit consumer. So, and for example, like even for surveillance, we intend to undertake, for example, like the social listening in the social media. Sometimes they were complaining about themselves, talking about this kind of product. I'm not so sure, I feel a bit, maybe not fair to me. So this chatter actually can also be extracted, by the supervisory team in the regulator.
But how do you maybe then draw the line between supervisory approach but also surveillance?
Yeah, actually, surveillance is one of the, I would say, a component within the supervision, because as a regulator, we actually undertake surveillance, and we also do a periodic review. We can also go and examine. If we want to know further, we can even go on site if we want to do so. We even do mystery shopping. For example, like act as if we are actually a consumer and see what kind of way of how the provider actually sells their product. So there are so many ways now with technology and even with AI. You can do actually a lot of things to be able to get data and even to be able to analyze the data in many forms. So the other thing actually is web scraping.
Okay.
We can actually look at the website and everything, see what do they actually, how they sell the products to the customer. There are so many ways, and these are the tools that actually would enable the regulator, not just to get directly from the credit provider, but it can actually be obtained from many other sources as well. The other thing, Naila, is that even like last year, we tried to understand the behavior of the people who use buy now pay later. For example, so we did actually a survey. We did about survey participants, about 21,000 who are actually actively using the buy now pay later, and we tried to get from them, why do you use buy now pay later? What type of purchases that you make? What do you think about yourself? Do you really understand the buy now pay later? So we ask all this sort of question and try to understand from their perspective why they are so attracted using the buy now pay later. So we got the idea. They said this is very convenient, not as if I do not have the money to pay cash, but I use it because there are so many incentives, and also something that I can manage my cash flow well as well. And then we try to validate with the data that we saw that actually the non-performing or the overdue debt is only 3.2% of the total outstanding buy now pay later product facility. So when we look at this data, then the question is that 3.2%, is it something considered as reasonable? Something that is within the tolerance? So this is what the kind of questions that we ask ourselves. Are we worried or not when people are actually using buy now pay later?
So the 3.2% is then quite a concerning amount.
Well, to us, it's still what we deem as manageable.
Okay.
Because when we compare with the credit card, we compare with other products in the market, so 3.2% that targeted, for example, like people who are income 5,000 and below, and even the youth, so some of them may not have stable income and things like that. So we make a judgment call. 3.2% is something that within our tolerance.
Okay.
So at the moment, we felt that it's still within our tolerance, but we are, as a regulator, we always must be able to look at the signs. We must be able to look at things before something happen, something bigger happen. So the point is that if the rate of growth is going to go and accelerate it continuously like this, then there could be something that we have to be more concerned about.
Which it is growing, right?
Yeah, it is growing. So that's where we need to closely monitor this, and see how the credit providers, the buy now pay later, for example, are carrying out their activity. How are they doing marketing? What kind of target or customers that they are targeting, and how actually they are mitigating their risk as well. Because currently that 3.2%, we have a bit of comfort. Why? Because immediately, if a person actually do not pay, the next day is considered also as overdue. It's not like 2 months or 3 months. So immediately it's not paid, it's overdue. So actually it's quite a stringent way to monitor. And importantly also, most of the buy now pay later companies, immediately if you don't make your first installment, you are not allowed to purchase anymore. using the same facility.
Right, okay. So there are a
meaning
lot of
that
curbs in
yeah,
place.
they already have the built-in
Yeah.
checks in such a way that they are not going to overexpose themselves. Indirectly, it also
Yeah.
protect the credit consumer because you have not made payment.
Yeah.
Then the point is that you can't purchase further.
Yeah.
So as a result, you have to make sure that you pay first, then
Yeah.
only you can continue to make the subsequent
Yeah.
purchases. So there is kind of built-in check and balance that currently make us a bit comfortable.
Yeah.
That's where the 3.2% is something that we feel is within the tolerance.
Yeah, it's manageable, but at the growing rate BNPL is now, it might be a bigger problem in the future. We want to pin that thought and we want to go back to that. Plenty more we'd like to unpack, but we are taking another quick break. Don't go anywhere. We'll be back in a minute.
Let's go.
Buy now, pay later is actually something which provides a consumer very easy access to a short-term loan. Basically, it's a loan, easy access to credit. And this can be paid over 3 to 4 weeks sometimes, or even 3 to 4 months, a maximum of 6 months. So it's a very, very simple procedure where consumers can actually do purchases for their products or even any services as well. So in other terms, when you talk about differentiation, I would say the differentiation would be where other traditional loans you have, interest. Whereas here, if the buy now, pay later, if you join that particular scheme and if you repay it on time, then that's fine. You don't have any interest. But the downfall is when you don't pay that on time. And then, of course, if you look at any other differentiation, it would be also where limited checks are done on your, assessment, your personal assessment as well, whether you're credit worthy or not, compared to others. And buy now, pay later schemes are also not included as part of the credit assessment. So, for example, it's not, included in your CTOS or in your SICRIS. So, if you owe, say, for example, more than 5 buy now, pay later payment schemes, it's not reflected in any of these credit checks. For the consumers, when you talk about easy access to credit, buy now pay later is definitely a scheme that many of the young consumers, I would say, would like to actually access this buy now pay later because you don't have to go through any loan application. It's done immediately at the point of sale. So it's a very easy system. The downfall will be when consumers do not keep track of how many of these buy now pay later schemes that they are involved in. So for example, then you could right up to 5 buy now pay later schemes. That would mean you might overspend in terms of their monthly expenditure. So I would say for consumers, that would be one of the concerns. For the merchants, actually, for them, it's better for them because they get revenue, from their sales. So increase in sales, and especially when if you're talking about e-commerce transactions, you will see that many of the I would say the cards that are in the e-commerce transactions actually then get converted into actual sales as well. And also, of course, then for the merchants, the best point would be that they get paid almost immediately from the buy now pay later providers. So I think if you look at Bank Negara's statistics and data, as well as some other researchers, buy now pay later schemes are being very popular among those between the ages of 18 to 35 years old. So we're talking about these young people, young workers. So could be comprised of students. You can see them also, perhaps those young workers who have just joined the workforce, and also the gig workers as well, because they get paid, on a daily basis or on a weekly basis. So we see that, these are some of the demography among our Malaysian population who are actually, involved in the buy now, pay later schemes.
So we would advise consumers, especially in whatever transactions of buy now, pay later, or be it in any financial transactions, only buy what is needed, what is necessary, and not based on what you want. Because what you want will be everything under the sky. So please buy what is necessary, what is essential, for your home, for your lifestyle, but to have a well-being and not fall into any debts. That's number one. Number two, I would want to say that make sure that you actually do a budget, a monthly budget, so that you know how much you're spending, how much you're servicing your loan for, and how much you have for your any other additional I would say spending. So this is also very important, because most of us are very irrational purchasers. When we go to a mall, we don't even think of what we want to buy, but if something attracts us, we do irrational spending. And I think this is where we need to limit our irrational spending and do planned budgeting, and this is one way to avoid, I would say, from us falling into debts.
Let's go.
Welcome back to the Insights with AKPK FEWRC with me, Naila Huda, and still with us, Tuan Abu. Thank you so much for a lot of the extensive insights you've shared about the Act. Now, we've covered a lot of ground on regulation, a lot of emphasis on protecting consumers from harm, but beyond regulation, we want to look at also perhaps some other proactive steps that the Commission can take, perhaps in strengthening financial literacy among adults, because as you say, that 3.2% is still at a tolerable, manageable sort of scale, but financial literacy at large is still quite a concern, especially among youths like myself. I don't trust myself to use the buy now, pay later, let's be honest, because I might just fall into that 3.2%. I think anyone can be vulnerable to this, right? So what can the Commission do to perhaps look at financial literacy as well, apart from regulation?
Yeah, I think one of the major concern about consumer credit is that whether our household or individual are actually incurring more debts than they should. So when we have an overall environment where our household debt actually is at 84%, it does trigger a concern that how much more debts credit consumers can be able to take on. So the question is that while we do not stop innovation with regard to seamlessness, be able to experience a very easy way for them to buy things or even to take credits, then the point is that it has to be done in a responsible manner. So responsibility is not just about the lender being responsible,
also falls
but
on the individual.
also borrower that must be adopting responsible lending practices. So there lies the issue about what kind of awareness, what kind of education that we need to undertake. So the reason why we did a survey last year actually is try to gauge, for those users, are they actually responsible when they are actually using buy now, pay later? So surprisingly, of course, this is self, I would say, attestation. They said that we know what is the risk if we are not careful using buy now pay later.
Yes.
But we believe, this is what majority of them say, we know the risk and we are very careful and we are good paymaster.
A lot of self-confidence.
Yeah, self-confidence there. But I mean, these are data.
Yeah.
You know, so when we look at the data, 88% of them, based on the survey, are actually able to pay on time, no issue.
Okay.
And then 12%, they actually didn't pay on time, but they still pay.
Okay.
Maybe slightly later. You know, and only less than 0.5% actually cannot pay. So the question is that, you know, this is something that we have to be able to make everyone well informed. But importantly also, there lies the role of, you know, this AKPK. Because AKPK actually, in terms of to be, you know, authority on financial wellness. And it's not just about debt management, but it's also about how are you going to be responsible in terms of how you carry out your financial affairs. How are you going to be able to be responsible if you are borrowing. So this is where the role of AKPK actually is very important. And I also know, because I used to be a board of directors of AKPK myself, you know, we have been pushing AKPK to say that, you know, when we undertake financial education, financial awareness, or even financial advisory, it's not just about educating them. It's not just about making them aware, but you have to also see whether arising from those kind of exposure and awareness, does that actually change the behavior of how they actually carry out the spending? Does that change the behavior in terms of how, if they are borrowing, they're going to be responsible and they know what it takes, you know? Maybe they should do a proper assessment about their liability, maybe more well informed about the kind of cost that they are incurring by borrowing. So there have to be that kind of education.
But that's from AKPK.
Yes.
Well, what can the Commission offer?
Actually, in our ecosystem, there are many parties that are doing, you know, financial education. So it's not about everyone doing it.
Yeah, it takes a village.
It's about how do you actually do it in an integrated manner. So my thinking is that we have to work with AKPK because they are actually having all the machinery and also the outreach.
And they have the faith as well, the sort
Exactly.
of confidence from the public.
Exactly. And then there are also this financial education network under central bank that coordinate the entire spectrum of financial education to the Malaysian as a whole. So we do not want to duplicate, and not necessary to do so, because we are actually, you know, maybe wasting resources as well. So the idea is that how to make it more cohesive in terms of how do we do it together in integrated manner, so that we can actually also operate in the very efficient way. And we also do not want to inundate credit consumers or people at large with so many kind of education that coming to them. Sometimes it's kind of overwhelming. So we need to have maybe a bit a better coordinated and targeted approach how we educate. But what's important here, Naila, is that financial education has to start from young. You know, it has to start from young so that you have the understanding even early on. Because people are actually getting to debts even early with the PTPTN loans. You know, after that they purchase the car, when they start to work, they're already having debts even at early stage of their life cycle. So based on that, how education should be done, it must be contextualized. It must be also be situational. When you need it, you have it. You know, it's not wait until you have problems and only you want to be educated. So that's where the whole aspect of education, you know, in terms of financial awareness, has to be done actually from early on, and it has to be also be thematic and be able to grow as people, you know, in terms of their changing life cycles as well.
How do people know where to go first, right? Do you think there will be this issue of overlapping roles, more layers of bureaucracy? How do people know, okay, I have this problem, I will need to go to A or B or C? But if there's, you know, A to Z, it might get a bit confusing.
I think with the current generation, including the young people, you know, everything actually is available. And you can actually use, you know, the current way of how this is being pushed out to the people in a very, you know, seamless manner. I mean, we're talking about, you know, youth it's very simple. They look at YouTube, they watch things, and then they search it so easily. They just more or less use the Google or anything. You can get the sources already. But what's important here is that how to create module that are actually easy to understand. How actually AKPK complement this by through many other channels. Sometimes they actually go to the school. Of course, we have also things that we are building in terms of the school curriculum or embedded into the school curriculum about financial education. That actually is already be embedded. So I think what we need to do more actually is to make sure that we are aligning all these things in the way that actually becomes seamless to the people, from early on until they become adults and even for retirement purposes. So what we need actually is just about coordination. And under the financial education network, which actually galvanize all these elements, they need to bring it together and make it more cohesive. So we have parts of it there, a lot of it, but there are already actually effort now try to actually make it maybe more easy for people to access.
What's the sort of timeline are we looking at?
Ongoing.
Okay.
Because this is a journey.
Yeah.
It's a journey, and then how much that we do it at the end of the day, I think the test of any education or awareness about whether it's going to change behavior, right? So it's about whether people would actually start to take accountability and ownership about how they actually manage their own financial affairs. Because sometimes what they say, you can bring the horse to the water, whether you can make them drink is another thing. So that's where I do believe that it is actually also education, awareness, and also the kind of internalization of our society about what debt means, and how they need to be more responsible about debts. Because these are human nature, things that that we need to look into, but we have to do in such a way that it become entrenched and actually
Normalized.
ownership and normalized, as you said, and it become their accountability. It's not about blaming the I was not educated, I was not given resources.
It's natural.
So these are the things that I do believe that will be actually a journey for us to actually enhance our financial awareness and education. And importantly, I see that more important is that how to track in terms of the ability of people, not just having a knowledge, but actually to be able to act on it.
Are these some of the KPIs that you have set out?
Not for CCC per se, but of course something that is important for us to know. But it's something that I would actually challenge institutions that are, I would say, good, and also maybe have a greater, I would say, accountability with regard to financial education. Right.
Are there some sort of successful models that you look at in other countries, or?
Well, I know some countries they started educating this even from from young,
from
even in primary school.
Kids,
it's already being done. But what's another dimension that we also do not lose sight is that sometimes it's not just about be able to be responsible on how you carry out your activity or spending, but importantly also people need to have more income.
Yes.
So this is another dimension. It's not just about spending within your means, but importantly is that whether you can generate sufficient income
to expand
for
the means
you
in itself,
to be able to have a reasonable lifestyle, to have dignity in terms of how you be able to live.
I think that's quite a refreshing take, because I think we see a lot of blame, a lot of shame involved, right? But again, looking at income in Malaysia comparably, relatively to other countries, there's a lot of work that needs to be done there as well.
So this is something that when I was in the board of AKPK, I did mention that sometimes it's not just about telling them how you're going to be spending within your means, but you also have to make them see is that how can they improve their ability to earn more income. How they need to also be more entrepreneurship, how they need to be more aware about cost of living is going to continue to rise. So the point is that, how are you going to be able to supplement your income? What kind of things that you need to do?
Yeah.
Education, entrepreneurship, capability, and things like that should be part and parcel of financial education.
Yeah.
It cannot just be about spending things wisely. That's not enough.
I think it's important to point out this mindset shift, not just among individuals in society to learn, but how to manage the finances better. But I think among regulators, among policymakers and academics as well, experts, to look at how it's not necessary to immediately put the blame on individuals, but it's rather a systemic issue at large.
Exactly.
Yeah, but perhaps that's for another day. Plenty more we can unpack that. But I think we've covered plenty of ground today, talking about the Act, about the Commission, and what we can look forward to in terms of protecting consumers. Thank you so much, Tuan Abu, for joining us today on The Insights, for sharing some of these really valuable insights with us today. And it's been just enlightening, really, to learn about some of these buy now, pay later trends, the Consumer Credit Act, the role of the Consumer Credit Commission in protecting consumers, and also to promote financial literacy, as we discussed. And thank you, of course, to our audience for tuning in to The Insights, brought to you by the Financial Education and Wellbeing Research Centre, FEWRC, AKPK. We hope this discussion has given you a deeper understanding of the evolving landscape of credit regulation, financial education as well in Malaysia. So stay informed, stay financially savvy, and we'll see you in other episodes. That's all from me today with me, Naila Huda.